Okay, good morning. Thank you very much for the kind introduction. And thanks for the invitation also from the organizers. It's been many years since I've been in Istanbul, unfortunately, because of the pandemic, and very happy to be here again. And to talk to you a little bit about excess capacity in the steel industry, some of the impacts and how the OECD is trying to help to address it with policymakers. So I just wanted to say a few words during this presentation about the OECD and some of our activities on steel. I wanted just to show a little bit the extent of the overcapacity problem we have in the steel industry, and also some recent work that we've done to show the empirical results, the hard evidence of the harmful impacts it's having on international steel industries, including here in Turkey. The nature of overcapacity is also changing. The structure is changing a little bit. I wanted to say a few words about that. It seems like it's carbon intensive nowadays. It's also moving downstream to the steel using industries. So there's some interesting things happening in terms of the nature of overcapacity. And then I wanted to say a few words too about how we're working with policymakers and some of the events that we have this year to try to reactivate a little bit our actions to address global excess capacity. So I'll just about the OECD, just for those that don't know, it's an international organization. The mission of the OECD is to promote policies that would improve the economic and social well-being of people around the world. So the motto we have is better policies for better lives. It was established already in 1961, but the historical roots, the predecessor of the OECD was already established in 1948. The purpose was to administer the US-financed Marshall Plan for the reconstruction of Europe. But really what it is, it's a forum for policy dialogue. So it's where governments come together and they seek solutions to common problems. They share their policy experiences. They identify the best practices in a number of areas. And then they try to coordinate their domestic and international policies. And this includes in steel as well, which I'll mention. How does it work? It's a member-driven organization, as we say. We currently have 38 member countries, but there's accession talks now with new members, so we're expanding, or will be expanding probably in the future. And the work really leads to the development of standards and legal instruments, what we call soft law, and the commitment or the common kind of thread in these standards and legal instruments is that there's a commitment to market economy principles and the well-being of citizens in fair and open societies. So the work on steel there, I think many of you know already, many of you participate perhaps. I see some friends and colleagues here. We have the committee, so we have a steel committee at the OECD, which was established already in 1978 to deal with the structural problems affecting the steel industry. These structural problems, they're still there. The players have changed, the countries producing steel are changing fast, but the problems are still there. And our mission in the Steel Committee is really to try to ensure that markets for steel remain as open and free of distortion as possible. We also work with many steel associations, and the Turkish Steel Producers Association, very happy, is one of them. And it's basically where we do a lot of analytical work to kind of look at the level playing field, we look at markets and capacity, trade policies, et cetera, et cetera. We also have on the other side, there's this global forum on steel excess capacity. This is more of a political forum. This was established in 2016. It was called for by the G20 leaders. And basically, as you know, 2015 and 16, this is when we had this excess capacity crisis, which emerged really. It was sort of record levels, excess capacity globally. Unfortunately, we still have excess capacity, and I'll discuss it. But this was really where we were mandated to, let's work on this problem, let's get all the major producers at the table, let's look at the policies, let's try to reform the policies so that we're not making the problem worse in terms of excess capacity. And we did a lot of work. Unfortunately, a lot of the main players like China, India, and Indonesia, they left the Global Forum a few years ago. So now is like a new moment in the Global Forum. We're trying to think of new actions that would incentivize countries to join and to really commit to reducing excess capacity, because as we'll see in a few minutes, it can't go on anymore. It's getting worse and it's having very detrimental impacts on the steel industry. And so we need to really address it. This is just a little bit of some of our work that we do. I'll happy to show this later if there's time, but these are available to the public on our website if you want to look at capacity developments, if you want to look at the latest steel market developments, we have these on the website for the public. And just to say this, you know, why is there so much policy attention on steel at the OECD? So why are we still focused on this? I mean, it's one sector, of course, but this is, of course, it's a sector that's very important economically and socially, strategically. And what we see, one of the effects of this is that we see that it's a sector, steel is very heavily subsidized. It's very susceptible to protectionist measures. So we see a lot of distortions in steel. This creates overcapacity and oversupply in steel. It means that market forces are not working very well in the steel industry. So we have misallocation of resources. This leads to trade frictions amongst trading partners and, of course, recurring steel crises, which we are now seeing in the steel industry. So just a little bit on when we're looking at the excess capacity problem, it's good to look a little bit at the market situation where we are. Actually, right now, the steel demand situation globally, so this is looking at the world as a whole, is still very weak. We had a very strong decline in steel demand in 2022. As you might recall, it fell by more than 3%. We're now sort of in a period where it's increasing very sluggishly, and the World Steel Association estimates that it was increasing by 1.8% last year and maybe 1.9% this year. This is very slow growth for the steel industry. And when we look at the longer term forecast, this is something we discuss once in a while in the Steel Committee, it looks like the long-term forecasts for the global demand for steel are quite limited because you have these structural changes happening in the market. You've got material efficiency and the reuse of steel, so it's like less steel is used for certain applications, it's a good sign. Normally it shows that steel is becoming more, more innovative, more advanced, but it does mean that we're moving from volume to value, which means that we don't need all that capacity for volume steel. There's also the effects of the downturn in the Chinese real estate sector. This is one of the biggest, components right now of the global demand weakness that we're seeing. And also demographic trends are also limiting the growth of steel demand in the long term in some economies. On the other hand, we see that on the supply side of the market, that the capacity for steelmaking just continues to increase. Our latest numbers now show that it's going to, over the next 3 years, we'll see an increase in capacity of about 158 million metric tons. So that is increasing. So we have 158 million tons of new capacity in the next 3 years. Demand is only increasing by about 36 million tons if we're stuck at this 1.8, 1.9% growth rate. And so we see that the gap between capacity and demand is increasing further. As we all know, this could lead to a flood of, and I should mention that a lot of the excess capacity is now very carbon intensive. It's a lot of investments, as we'll see, in Southeast Asia and South Asia, developing Asia, which is going into the blast furnace, basic oxygen furnace route. This could lead to a flood of relatively high carbon steel exports in international steel markets. We're already seeing this. We saw already last year that Chinese exports of steel are approaching those massive levels that we saw 10 years ago during the emergence of this crisis. Then we have, of course, all these other kind of macroeconomic factors. We have a slowdown in world economic growth this year. The OECD recently released its economic forecasts. We have high inflation. We have government debt levels are just increasing substantially. This is fueling more inflation and also leading to higher interest rates. This, of course, has a big impact on for steelmakers, because that means when you have, of course, high inflation, you're reducing the consumer purchasing power of households, and they stop purchasing immediately those kind of higher kind of expenditure items that are very steel intensive, cars, refrigerators, etc. those kind of things get affected first. Also, higher interest rates are very bad because about 75% of world steel demand is linked to fixed asset investment. So higher interest rates mean kind of less construction activity, less business investment in machinery, et cetera. So we have, and some of the risks are that we might, because of this crisis, we might see that countries around the world start to subsidize their steel industries more. I mean, we're already seeing kind of an acceleration of subsidies. This could lead to a worse outcome for the industry and of course, a rise in trade frictions between trading partners. So this is the risk, and this is what we're trying to raise awareness of with the policymakers in the OECD, in ministerial meetings, because we have to do something about this global excess capacity. And I'll mention just a few facts about the impacts. Just watch the time a little bit. This is just sort of the latest numbers that we have, the latest forecast now, which we'll be discussing now at the next Steel Committee meeting in a few weeks. This is the new capacity expansions in 2024 until 2026. So it's a three-year period. So we still see a lot of growth, as I mentioned, a total of about 158 million tons of new capacity. Much more than half of that is centered in Asia, as we can see here. See if I can use this. Yeah, sorry. You see ASEAN and India, for example. This is where the center of the growth is in terms of new capacity. ASEAN and India, I think they account for about 70% or so of the Asian capacity increases. This is also very interesting, I think, from the perspective of ASEAN, Southeast Asia. In other words, most of the capacity growth in that region is driven by foreign investments. So it's the Chinese steel companies that are investing heavily in Southeast Asia. So most of their investment is really driven by these sort of investments by Chinese companies. It's also worthy of note that most of this capacity growth in ASEAN and India, it's really focused on the blast furnace BOF route, which is very relatively higher in emissions, as we know, compared to EAF steelmaking. In other parts of the world, you also see some capacity growth, usually between 18 and 20 million tons a year for Europe, the Middle East, and North America. Almost all of this is based on the EAF steelmaking route. So there's a lot of new demand coming for scrap. Of course, globally, we're seeing this. This may change the landscape for scrap supplies globally. But this is also showing that the green transition is happening in steel, that steel companies are moving to EAF furnaces, electric arc furnaces, and in some cases replacing those, shutting down the blast furnaces and the basic oxygen furnaces. Just to say, this is a little bit of just the kind of global picture, I guess. So excess capacity last year at the worldwide level was more than 500 million tons. We don't have the actual demand data yet for last year, but when you look at the capacity relative to the production of steel globally, the gap was about 552 million tons. And it seems to us that it's increasing moving forward. And I just wanted to put that number into perspective. So you see 552 million tons of excess capacity. And this is just for purposes of comparison. When you look at the steel production of economies that are participating in sort of the OECD's work on steel, the excess already exceeds the total production of large and medium-sized steel producers, the combined production of those. We don't have here, of course, China and India on this chart here, but it shows you, the EU, Japan, the US, Korea, Turkey, Brazil, medium-sized, very large producers as well. So it just shows the magnitude of the problem, and also that global excess capacity is now it's almost twice the level of world steel trade as a whole. So it just shows you, the potential. If you have a demand slowdown in these countries that have excess capacity, like in China now, because of the real estate, if you have a demand slowdown in those countries that are building up their capacities, it can almost wipe out, steel industry of a medium-sized steel producing economy because it affects it through the trade, and it could also, it can create serious disturbances for trade. in the global market. I just wanted to show this graph here because we normally talk about the major players, China and India, but this shows also that the capacity growth of smaller players, it shows the capacity growth in terms of volume and in terms of percent over the last 5 years. And we can see countries like in Southeast Asia, for example, Vietnam and Indonesia. Indonesia had its capacity growth over the last 5 years was 50%. Vietnam had 25% capacity growth in the last 5 years alone. 5 years ago, these were not large exporters of steel. Nowadays, they're becoming in the top 20 exporters of steel worldwide. So it's having an impact. The smaller players are starting to get really big. You see this in Iran, for example. Iran has added about 16 million tons of capacity over the last 5 years. And Iran alone has 83 projects this year and after this year, 83 new steelmaking projects in the pipeline. So it shows sort of the ambitions. And then Iraq, of course, Iraq is very small, but it's had kind of very fast capacity growth in the last 5 years. It's now as large in terms of its capacity as the third largest steel producing economy in the Middle East region, which is the United Arab Emirates. So it just shows that things are changing and it's very dynamic, this capacity growth. I just wanted to show this graph here because it shows the risks. When your capacity is increasing much faster than your demand, this is of course when you export and when you disturb other countries in terms of trade disturbances, and this is where the problems happen in the steel industry. And I just wanted to show this graph here. Sorry, it's not working too well. Anyways, on the left-hand side, it just kind of it shows the demand growth in those economies relative to the capacity growth on the y-axis. And for some countries like Malaysia, Iran, Vietnam, the demand growth in the 5 years to 2021 was negative, actually. So domestic demand was negative. But the capacity growth was just very, very strong, as we can see, 40% and much higher. Indonesia had some demand growth. It had some strong demand growth of 10% or so, but its capacity growth was 60%. So you see this imbalance. And this is where I think where we have to really, it's one of the points I make here, is that it's very important that we now start to distinguish the capacity growth that is for domestic demand and that capacity growth that is for exports. And I think that's something at the OECD we have to focus on that a little bit more. Just skip a few of these graphs just in the interest of time. We've also recently we're looking at the impacts of excess capacity on international steel industries, on the countries that are impacted by global excess capacity. And for the first time now on Friday, we released a new study. I'll show you the link at the end, which really it tries to quantify the impacts on domestic steel industries and impacted countries. But just anecdotal evidence, just what we see anecdotally in the market, we see, of course, that it's having excess capacity is having detrimental effects. We see that it affects countries through the trade channel. We looked at about 5 economies that are sort of at the source of global excess capacity worldwide. We see that in the last 5 years, about half of all the anti-dumping and countervailing duty cases that are active in place were against those countries that have this excess capacity or they have growing capacity. China, Vietnam, and Indonesia alone accounted for about 34% of all the trade cases applied in steel worldwide. So it is having material injury on domestic steel industries. We can see this clearly from the anecdotal evidence. And we also see that it affects the profitability of the industry, as we all know. This graph here is showing you the operating profits or the EBITDA over revenue of the global steel industry worldwide. And it shows you the capacity levels. And it's just to say that you can see from the black line there, the operating profits, they plunged in 2022. That's the latest data we have. So they fell by half as relative to 2021. And that we're at profitability levels that are just not sustainable. We're at the same low levels that we saw when this excess capacity crisis emerged in 2015 and 2016. It's just not sustainable because the steel industry needs to have much higher operating profit ratios, 15%, maybe even higher, if it wants to reinvest in process innovations, product improvements, especially if it wants to shift to low carbon steelmaking. So at the moment, this is just completely unsustainable. And so we released this paper just on Friday to quantify the effects. This is just a little bit of a schematic, kind of stylized effects, what we've seen happening in the steel industry, the global steel industry, and over the past years. And it was the thinking behind of how we modeled this study that we did. It's just basically you have, in a country A, if we start in the very top box there, you have a government that tries to be self-sufficient in steel production, so you subsidize the steel industry, you intervene, the government intervenes in the steel industry. You see that leads to overcapacity of steel in country A. Those countries, very often at some point, they see a dip in demand for steel. Now, if the demand for steel is falling in your country, you would normally want to scale back on the production. But the problem is that you have inefficient steel producers, many of those which are the ones which are subsidized, and they actually increase the production of steel because they want to achieve lower unit costs. And so they make more supply, the demand is falling, so you have these effects that are not in line with the market. The surplus of steel is sold on international markets, of course. Steel exports then surge from that country with excess capacity. You see the potential for unfair trade. And then the countries that are affected, Turkey, for example, let's say, is affected by global excess capacity. Its imports increase from those countries with excess capacity. It loses, the steel producers here lose their domestic market share. It also means that in some countries, which we saw some years ago, that efficient steel production is displaced because of these excess capacity imports. The capacity utilization rates of the affected steel industries fall, the profits fall, and that eventually leads to less investment in physical capital, R&D, innovation, also for the green transition. And overall, you have a less productive steel industry and viability. So I just wanted to, I won't go into the details of this. I just wanted to show you, just to say that this study that we just released now on Friday, we tried to look at this from different kind of methodologies, different sort of estimation approach. So we looked at panels of countries, so it's cross-section over time. We looked at panels of steelmaking firms over time, and we also looked at time series approaches. But just a summary, and I'm sorry if this table is a little bit maybe hard to read, but just as a summary, you can just see the colors there, the colors in those columns. It just shows that the effects are very, very significant, that they're statistically very significant. When you have global excess capacity, for example, it means that if it's Chinese let's say it's Chinese excess capacity, when you have that, it means that that your imports of steel from China will increase, and they will take your domestic market share. So steel producers in the affected economies lose their market share, their capacity utilization rates go down, it's negative. They see their revenues go down, they see the EBITDA go down as well too. And all of these are just very significant. There were some variables that were not significant, so we put nil effect, but it's just to show that these are real effects. We also did, I think that was interesting from the study, was a counterfactual exercise. So it's saying that what would have happened if Chinese excess capacity had not increased the way it did after the global economic and financial crisis of 2008 and 9? That's, of course, we saw the crisis, and we saw this emergence of excess capacity in the steel industry, significant, I think, as we all know. So the last 20 years have been just this growing excess capacity. And what would have happened if we hadn't had that excess capacity, that global excess capacity? Well, you can see that the blue line is the hypothetical. It's that hypothetical situation if we had not had it. And the orange line is the actual. And we can see that the capacity utilization rates of the steel industry would have been at healthy levels if we hadn't had that excess capacity globally. They would have been 85% or more during much of the period. The actual was what we had much lower capacity utilization rates, 75%, sometimes lower. Also, the operating profits of the industry on the right-hand side, they would have been much, much healthier. So instead of the 10% that we've seen during this excess capacity crisis, we would have had levels much, much more sustainable, so the industry could have really, invested. We also saw that there were effects of excess capacity on profitability. We saw this also from stock prices as well, too. So in the study, we also looked at stock prices. These are daily stock prices. We estimated these models. But it's just to say that when the actual stock price is less than the forecasted value based on a model from finance theory, it means that, and when that happens after the global excess capacity emerged, so after 2015, this is the period where we have this massive overcapacity. If the stock prices are less than the forecasted values, it means that excess capacity has hurt the profitability of the industry very negatively. And what we saw, I think just the basic results is just that we saw that many European economies, many European countries were very affected by excess capacity globally after 2015, so their stock prices were hit relative to the forecasted values. But this is also an interesting study because you can look a little bit at those countries and the type of steel that they make to see who's a little bit, who's more insulated from those negative impacts of excess capacity. We see that the Japanese, for example, they were very negatively impacted, but more recently their stock prices are just slightly lower than the forecasted values, maybe 10% or so. It means that also it's interesting to see what kind of steel products are the Japanese making. Is that helping them to kind of, weather the storm of excess capacity, to kind of insulate themselves? There's also interesting work that you can do to look at the type of steel in terms of its carbon intensity. Are countries that are producing that green steel, like Sweden perhaps, and Turkey has a lot of EAF, so less emissions. Is that also helping to insulate from the impacts of excess capacity? So this is more work that we have to do, but just wanted to highlight that. So this is sort of a little bit of a summary of our recent work. Non-market excess capacity is persistent, so it's long-lasting and is growing. We see these significant capacity expansions and slowing steel demand, particularly in ASEAN. Excess capacity has now, we've quantified the effects, but they're clearly negative on international steel industries. And there's more risks because of the housing market slowdown in China, and also this possibility of overinvestment in developing Asia, overshooting the demand. I just want to say a few results. Sorry, this is the study, but a few words on, skip a little bit of this in the interest of time. Yeah, just about the nature of excess capacity, just to be very, very quick. One thing that we have to look out for now is the nature of overcapacity. So steel excess capacity, it now seems to be shifting down the value chain. So when you look at countries that had massive overcapacity, when you look at China, for example, it is now becoming kind of a major exporter of not only steel, but also the goods that are made out of steel, that indirect steel trade. They've surpassed the Japanese last year in terms of exports of cars, for example, as this graph shows. So that excess capacity, we need to see if it's fueling the production of downstream sectors, maybe aerospace, machinery, shipbuilding, etc. Because this, I think we need to move a little bit now from the trees to the forest, the big picture. This is important because it could mean that it has impacts on deindustrialization of advanced economies if this is happening. So I think this is something that we're going to have to monitor more at the OECD. I think it's a question that our members are very interested in. Another factor too, sort of in terms of the changing nature of excess capacity, as I mentioned, it's carbon intensive now. So we will see that the trade policies are going to increasingly focus on excess capacity, but also on the carbon footprint of the steel industry. And this may have, of course, impacts on regional trade. So those countries that don't have a carbon-related trade policy might feel influxes of the carbon-intensive steel because of global excess capacity. We also see that excess capacity is hitting the industry really at a time when it needs to invest in decarbonization. We're seeing already this is leading to an acceleration of subsidies and support measures for green steel. But we need to monitor that because we want to make sure that those subsidies are having the consequences that are intended. In other words, they're reducing the emission outcomes of the steel production. But we also don't want that to contribute to more overcapacity or to distort the level playing field in an unneeded or unwanted way. There's also more of a focus, I think, on raw materials as well too. That how do you boost supplies of raw materials, because we have excess capacity is hurting the industry. That there's also, I think, support for the raw material side, a lot of thinking there, a greater focus on the critical raw materials for decarbonization. Just to say also that, yes, so there is I think in the short term, this transition to low carbon steel, it's going to have sort of a short-term impact on, it's going to increase overcapacity in the steel industry because you need to replace the older and the more outdated production facilities. And there are, of course, a lot of exit barriers. There's environmental cleanup costs. There's social implications. You need to ensure the just transition. So these effects may mean that we have, in the short run, a little bit of effect on global overcapacity. I just want to mention that the Global Forum on Steel Excess Capacity is strengthening now its commitment to tackle this global overcapacity problem. And I'll just end here, but I just wanted to mention a couple of points. Last year, we signed up to a new mandate. So the Global Forum, this G20-led initiative that I mentioned at the beginning of the presentation, is going forward for another 3 years. Under the Canadian chair last year, we started a lot of substantive work to look at these problems of excess capacity. And we had more outreach to non-members. So we talked a lot to Southeast Asian countries, which are now, they're starting to suffer from overcapacity, and they also want to take sort of, they want to participate and learn a little bit what we can do about this. We've also had enhanced stakeholder involvement. So I think some of you also participated. We're trying to build up our stakeholder network. But we also had a very important ministerial meeting last June, and where the ministers, they met at the OECD in Paris, and they asked the GEFSEC to develop tangible policy options to address global excess capacity. And they might look at those again when they consider what further actions may be needed. The ministers are going to meet again this year. Later this year, we'll probably have a ministerial meeting in the third quarter of the year. But this is just to say that we do have, there is kind of new momentum here to really, what can we do to take action now, some real concrete action that we could do to really have a meaningful impact on global excess capacity. The Global Forum is being led by the UK this year. And what we're doing now at the end of March, just for your information, on the 27th of March, we're organizing a stakeholder event. So it's for our steel industry friends and colleagues from around the world to kind of help us to put all new options on what could be done, just concrete options, no matter if they're feasible or not. We need to think out of the box a little bit because this problem is getting worse and it's just impacting the steel industry too much. So it might look at, what would an agreement on excess capacity look like, a legally binding agreement that has remedies, that's enforceable. It could be to look at other approaches. We had at the OECD, we had a steel subsidies agreement. Maybe we should revive that because that was also a way to address excess capacity. But we need something with teeth that's a little bit stronger. And so that's the focus of the stakeholder event. If you're interested in that, please feel free to contact me. That's on the 27th of March in the afternoon after the Steel Committee meeting in Paris. And I'll stop there. The conclusions, excess capacity is getting worse. It's harming the industry. We at the OECD, of course, we're committed. We need to do a little bit more. We'd like your inputs. We'd like to talk to also industry. And if you want more information, please find the links here And feel free to contact me. You've got my email there if you need more information or want to reach out and be part of these discussions as well. So thank you very much. I'll stop there.
Thank you very much indeed. Are there any questions from the floor for Mr. De Carvalho? Yes, please, Mr. Chairman.
Thank you very much for the very informative presentation. It gets really scary when you say 158 million tons of new capacity is going to be added. That's almost 7 to 8% additional capacity. But at the same time, there are some old-fashioned or unfeasible facilities that will be probably shut down. Are you considering that as well?
Yeah, and that's a very good question. Now, on the closure side, the problem with the data is that companies don't want to announce their closures normally because you have, of course, negative impacts on many aspects, workers, et cetera. So it's a little bit harder to forecast that, but we are taking into account sort of what we know, and we are seeing replacements happening. We're seeing this in North America, for example, new EAFs in the southern part of the country, the closures of BF, BOF in the lakes regions, et cetera. We are taking it, but the problem is that we don't see indications where we see the capacity growth right now. Southeast Asia, we also see it in India. We don't see sort of, we know that these countries have net zero commitments, so they want to be, reach net zero by 2050. In some cases, it's longer than that. But we don't see sort of the pathway, what they will do to close down these very high emitting, capacities, which, they're building right now. And so new capacities are coming on stream even as we talk. New, very large integrated steelmaking plants are being built in Southeast Asia which are carbon intensive. And we don't see sort of, indications that how they will deal with this. So it's something, it's something we need to watch. But just short answer is that it's difficult to forecast the closures. When we get them, of course, we take those into account. But at the moment, that's always a risk, is that, it could be more than actually comes if we do have more closures on the high emission side. But it's a good point, though.
Thank you very much. You have another question? Mr. Darbeler.
Finally, I got it. Now, my question is, how does OECD define what Europe has been announcing as, or has been granting to the steel industry for the conversion from, let's say, high emission steel manufacturing to low steel emission manufacturing? I think so far the number have reached over $9 billion. So in your terms, are these subsidies, or how do you define them? Because that's going to be I believe, the next point of argument for us in future. How does WTO will define these? Because for the last 5 years, we've been tackling with all these issues on the protectionist side. Now we are facing another front where there'll be restructuring, especially in Europe. So those are the ones who keep claiming countries like us being subsidized. But I wonder what OECD thinks about this.
Yeah, I mean, from, it's of course support for the industry in an area where, where the industry at the moment, because it's suffering from this overcapacity problem, it doesn't have the profitability to make the transition itself. It's certainly sort of a support measure that's kind of needed to meet this societal goal. Now, having said that, though, we do have in the Global Forum on Steel Excess Capacity, we do have policy recommendations that were agreed there by all the members about support measures. And subsidies and support measures, they should not contribute to excess capacity. So this is something that's clear, like in our work. Now, we haven't looked at this specifically now at the question that that you're asking, but I think it links back to what I said, that we need to start, monitoring this more globally. We know that there's a tendency now to, to provide more support measures for the industry for decarbonization. And I think that we need to make sure that this is having kind of the intended consequences for the industry, but it's not contributing to excess capacity, because those are the policy recommendations that we've agreed to, that we should not have support measures that tilt the playing field, that give a competitive advantage to some countries and not others. We shouldn't have support measures that are provided to certain companies, like state-owned enterprises only. We need a level playing field there. We should not provide support measures that that distort markets by leading to more excess capacity. So that's, I think, a little bit the next step. We're not there yet, so I can't answer your question, but we're, I think, at the threshold where we need to start analyzing all these measures and seeing what impacts they have. We've already started looking at the impacts of subsidies. I think as a future step now in this work, we'll be discussing the impacts of subsidies now at the March Steel Committee meeting. As a next step of this work, I think we will be looking more and more at the environmental consequences to make sure that, yeah. So sorry, it's a non-answer, but I think we're moving to analyze that more.
When you have CBAM in place, and on top you grant the financing of funding just to convert the BIFs into EIFs, that's where my mind gets mixed up a little bit. Whether these are really climate action related supports or subsidies.
Good point. And yeah, it's something I think to definitely start looking at, I think, but we haven't done so, but yeah. Well,
thank you very much.
Very good point. Yeah.
So I guess that's all.
Okay.
On the floor, thank you very